Hello everybody, Jim Malone here, coming to you live on Dallas Trading Floor. It is Wednesday, and the Fed has basically said that we're gonna raise the rates 70.75 or 75 basis points, and that caused the stock to rally. But you know what? By the end of the day, we've already started to pull back. So don't this is more of a I don't think this is really the beginning of a new rally. I'd like to think it was, but I don't think it is. I think we're going to see, stocks settle a little bit, and then I think by the end of the week we're going to be lower. The oil stocks right now, difficult to buy, kind of in a no man's land, very tough to buy. But I think that it might be wise to kind of look at some opportunities here. I think there's a chance to get back into ExxonMobil. I did sell my shares. Well, no, I'm sorry. That was on Monday. Yeah, on Friday I sold my shares in Exxon, and then I have been waiting for another entry, and I'm probably going to be buying ExxonMobil this time instead of Chevron, just because it looks like it's set up a little bit better. It's a little stronger. But they're both very good, I think, as it goes. I did lighten up on my position on the TBT, and this, of course, is what moves up when the interest rates move up. Let's take a look at the TBT right here and now, and we'll take a look at that. And let's pull up the charts. There we go. All right, so this is the TBT. You'll notice I did sell up here, fortunately. I kind of anticipated this a little bit. We peaked a little bit and then we pulled back. I'm going to see how this one trades. I don't think this is going to trade down too much, but I may be back into this one. I just wanted to make sure. This is really a classic case of, buying rumors, selling news, and so I wanted to sell before the Fed meeting. And I didn't sell everything. I just sold. I sold about 100 shares, not a lot. But I did sell 100 shares of it to capture this this price. It's pulled back. I mean, pretty much. Almost no gain on this one. About $1 a share. So not a whole lot of gain, but it is a gain. So there you go. I mean, it's basically pulled back down. The TBT has pulled back down to 28.01. Now, if this comes through nicely, then we'll probably look to do something something going forward on that. So let's oops, no, that's my little message for today. It's actually a little thing about how to do how to recognize a interesting chart pattern. I'm going to go through that in just a second, but until then I'm going to kind of go through just a few little things before we get to the questions. Basically, the NASDAQ composite moved up about 2%, but then it kind of gave back its gain. So I think that's worth looking at on the charts. And let's see if I can get that. There we go, NASDAQ composite. There we go. Okay, so this is kind of what was happening on the charts here. We came down. They announced it popped. I think you can see this. I don't know if you can. It popped up here, and then it's back down a little bit there. Do I expect a reversal? No, I don't think this is a reversal. I think by the end of the week, we're just going to continue that downward trend. So I wouldn't get too excited and start buying tech stocks, though I would like to buy tech stocks like AMD and stuff like that. I just don't think it's time yet. I still think we're going to move lower. I mean, that's kind of what I'm looking at. So, not really anything super exciting. But there you go. Now, as I say, I did sell most of my position in the TBT, but I do still have a little bit left in the small portfolio. Wanted to show you that. Basically, as you can see, we're mostly cash. We're kind of waiting to go long here. This is my small portfolio. I use that mainly to go long. We do have a little bit of a profit on the TBT. Again, we did take profits today on this one, but right now I'm sitting mostly in cash. Just so that everyone knows, I'm waiting for an opportunity to come possibly back into the market and make and see if I can make it work there. So we shall see what's going on there. Also, I wanted to show you what I'm holding very, very little. Very, very little right now. Most everything I'm talking about right now are shorts. And I have a little video that I want to show you in just a sec to see if we can do, for shorts on one that I'm going to be putting on probably tomorrow on Starbucks. So kind of give you a little explanation on that one as well. So here's basically what I'm holding currently. The TBT, it's down today. Of course, we did sell a position before the announcement. It went down the announcement. There was some selling action. As you can see, the volume's up there. I'm holding BP. It was up just a tad, and then Shell. It was up just a tad. So those are the only two stocks really that I'm holding. They're both oil stocks. They're both huge, and they're really not very exciting. But it's just kind of to keep my toe in the water here with the market. Now I am mostly short, and I want to put that up here to show you kind of what is happening there. Of course, the shares today moved lower. So the shares basically moved lower. So we did see some of our profits evaporate. Netflix, I did roll this one forward, and then basically it wasn't that expensive to roll it forward, but it did cost us about $50 to roll it forward. We did roll it forward, and we've given it basically another week for it to work. Currently, the bear put spread here is a 175, 170, which means that if it moves below 175, that's where we start to make money. So NFLX is the symbol. Let's take a look at this one. We moved it to a July 1st time frame. And if we're looking at the chart here, we can see definitely that we're up a little bit after hours. We're about 180, so we need this to move down about $5 before we're in the money. But remember, we moved it out a little bit. It was getting a little bit tight on that, so we have till July 1st for that to happen. So hopefully we will pick up that trend again, and we'll start moving lower on that. Currently, the value of the trade, we're at a loss position right now at 129. But as Netflix moves down, and that is the trend, as it moves down, if it moves below 175, that's where we'll start to make the money on that one. A little bit, another trade that we had on here was the Hershey trade. This is basically a bear put spread on Hershey. Now this one's acting a little bit better than the Netflix one. This one did move down today. It's up in the after hour market, but the trend on Hershey is still downward, as you can see. The trend on Hershey is still lower. So we did come down. We came up to this 21-day line. We got rejected, and it looks like it's going down here. Now we do have a floor here at 201. So we do expect this one hopefully to move lower. Now the spread on this one is basically a 210. It starts at 210 and then it moves down to 200. So as long as it stays below 210, we should be doing well on this one. This one expires on the 15th of July. So that one's looking pretty good. We're up about, on this one, $127 so far. And if it moves lower, then we will move higher on this one. The last one I want to talk about is Nike. Well, Nike and then Palo Alto Networks. I'm going to show you the ones that I did put on today. Let's look at Nike NKE. That is right here. Okay, there. Oh, takes a second for it to cycle. There we go. All right, so this is Nike. As you can see, we shorted here. Basically, as it came up to that, basically above the 10-day line, it has moved below the 10-day line now. We shorted at the 10-day line. It's basically moved down here, and with this one, with Nike, it's looking pretty good. We're gonna, we're up in this one already, and it looks as if we're making progress on this one. This one makes all the money between 115 and 120, and currently we're at 113. So we're below. If we keep at these levels that we're at right now, we will make all the money on the Nike bear put spread. Today I got into a bear put spread on Palo Alto Networks, PANW. That's the symbol for it. Let's take a look at that, see how that's progressing. Not quite as well. This stock is up a little bit, so we kind of need it to adjust a little bit. This one starts making money below 480 as it moves below 480. We have a little bit of time on this one, July 15th on this one as well. If this thing moves below about 480, we just entered this one today, then we will start to make money. So I expect it to drift higher up to the 21-day line, and then hopefully it'll get some resistance there and start to move lower, because this definitely has not reversed yet. We will see. There's been some buying here in the after hours, so who knows what will happen. But we did have a bounce on the NASDAQ today, and again, I do expect the NASDAQ to be moving lower by the end of the week. Let's get into the last two here. We did Palo Alto Networks. Let's look at Costco. Costco, we had to adjust the trade, but we were able to do that. We're still down on the trade, I think we're starting to finally get some traction here. We have until October. We have basically until October 17th here, so we've got quite a while. So now that we really shorted at the wrong place here. I shorted as it made its move down here. I shorted it here, and then I had to do an adjustment. But we did an adjustment, and so now we're at basically 420. Anything below 425 is going to pay some money. We're at 458, but we have until October. So that is looking good. All right, one last thing here. Let's get to the little video that I just made here and see. Yep. Let's see if we can run that as well. This is the video for the trade. I haven't done this trade yet. This is on Starbucks, and let's put it up there. As you can see, Starbucks has lower, but has rallied up, and now is making an attempt to come up to the 50-day line. But it looks like it's failing here. This is where we want to do this is whether we want to start our bear put spread. Here's how it works. First, we buy two contracts of the July 15th 75 put, and then we simultaneously sell two of the 70 put. And this gives us a total out-of-pocket expense of $378. If the price of Starbucks stock goes below 70 by July 15th, we will make all the money. In this case, the total would be $622, representing about 164% gain on the risk. This is the expected profit and loss for this trade. As you'll notice, if the stock goes down in price, the value of the trade goes up in price, and if it closes below $70, we could potentially make as much as $622 or 165% return on the risk for a period of 1 month. Now remember, this is not a suggestion to either go into the trade or not to go into the trade, just for educational purposes only. I'll be talking about this a little bit more on my show today at 5 o'clock, or you can just tune in to www.youtube.com/DallasTrading4. All right. There we go. I think we're through all the stuff there. So let's get into some of the questions, and let's go here. Oh, thank you, Lisa. I think. Let's see. Thank you so much. Hi, Jim. Yeah. Hi. Hello. How are you? Can you explain how UVXY leverage stocks work? Can I hold it for more than a day? Well, let's take a look. Now, these are the leverage stocks. These you don't want to hold. These are kind of like a hot potato. You're right to ask this question, because what these ETFs are is that they're leveraged. So if you don't get movement, they can deteriorate very, very, very fast. This is the ultra short VIX. So if there's a rise in VIX on the VIX, we're going to see this one move up. So let's take a look at the chart. The chart, as you can see, is pretty you know, kind of moving down, down, down. Let's see on the monthly here. Okay, so basically, you know, there has been, let's go back here to the weekly, kind of a tough chart to read here. We've had volatility moving down, and this has been tracking the volatility, which is the case. Now, in the last week, we've seen it move up just a tad bit here, so it's just moving up a little bit, and there's been some buying on this one. I would not recommend holding this for any amount of time. I agree with you. I think the way to do this one is if you see a turn on the VIX, if you see it moving up, if you see the VIX spiking, then you want to buy this one. But you don't want to hold it for more than a day, because once the spike is done, that's it. It's gonna move back down, and that's why this is sort of flat. You don't see this, you know, with more of a, you know, with more of a spiking. I think the one probably better one to look at is probably the SQQQ. Now the SQQQ is an inverse against the Qs. Notice how today on the SQQQ it moved lower. Notice that, because if the QQQ is going up, if the Nasdaq 100 is going up, this one's going down, and if the Nasdaq is going down, this one's going up. That's kind of the way it is. But this one you don't want to hold very long either. Why? Because this one, you know, this one will move quickly, but then it will peter out just as quickly. The best thing to do on these is if you're looking for an event, like today would have been, if you had thought, for instance, you know, and I didn't do this, but if you were thinking, well, the market is going to rally on the interest rate rise, you would have bought the TQQQ, which would be sympathetic in the movement to the QQQ, and that one, you see, that one actually went up today. If you can see that, it went up today. So if you thought that the news was going to be sympathetic to the action of the Nasdaq, you would have bought the TQQ. But if you thought that something was going to happen would be very negative, like the inflation numbers coming out too high, you would have bought the SQQQ right before that happened, and then that would have been a upward motion. You'll notice that's exactly pretty much what happened here. When the inflation numbers came out, boom, the TQQQ went up, you see. But you only really want to hold it about 2 days, because then it's going to, you know, it's going to fall down. Because this does not hold any stocks, it just holds warrants, and it holds option positions. So that's kind of my take on it. But you're right to think that with the UVXY, it's really, you know, it's these ETFs that follow the VIX are very difficult. There was one last 2 years ago called the TVIX, and they had to get out. They had to close the fund because it was so volatile. So I'm not a big fan of it, as you can tell. All right, are you holding Netflix and PANW put spreads? Absolutely, I am, and show you that here. This is kind of what I have on that. On the Palo Alto Networks trade, I'm down a little bit. I'm down about $100. That's because the market was up today. I do expect this one to move lower. Right, PANW. There we go. Showing you the chart here. There we go. So this is the chart for Palo Alto Networks. I did enter this one today. I have, yeah, there we go. We noted it here. I did enter this one today because it went up a little bit. It is off, as you can see on the recap here. It is off a little bit. We're down about $100, but I do expect this one to move lower. We'll see. If not, then we'll just have to do an adjustment. But I do expect this one to move lower. Currently, Palo Alto Networks is at 490. This starts to pay the money if Palo Alto Networks drops below 480. So we're about 10 away there. But we're at the very beginning of the trade. So we have about 30 days for this one to work. Let's see. And you also wanted to look if We were holding the Netflix, yes. Now here's what I did with the Netflix so that you'll know. On the Netflix trade, let's put that up, NFLX, this is the chart here. Let's put the chart up. With the Netflix trade, what I did is, as the trend on Netflix has been going lower, but we've had this L shape for quite a while. It's just kind of just shelved here, and then I expected this to break lower sooner. It's starting to break now, but I had my timing wrong on it. So what I did is I rolled it out. It was due to expire on the 24th of June. What I did is I moved it out one more week to July 1st, and that cost me about $40. We're still down on this one, about $120, but I do expect with this rollout, as you can see, the current value of the trade is about $357. We paid all in $486, so we're down a little bit on this one, but I do expect that as this breaks lower, that we will see some improvement there. So that's kind of the those are the two that today. But today, remember, today was an up day, so that's kind of the deal there. Jim, you were spot on it about moving to cash. Yeah, thank you very much. And the stock market weakness. What is your prediction for the on bottom? You know, I don't know. It's so tough because here's my guess. Here, and it's always a guess. But I want to go over here to the S&P 500 because that's the one. That's a really broad index, but it tends to be, it tends to really show it. So let's look at the S&P 500, and this is really what I kind of think is going on here. And I kind of did a little bit of a markup because I've done this one a few times, but if you'll notice, this is kind of what I'm seeing from the market. Typically, I still think that we're in the beginnings of a downward leg here. So the first leg down on the S&P it really started in November, and well, December or so. It really started in December, and then it rallied up here, and then there's the second leg down, and this one ended really basically about in the mid-March. You can see by this bar here, there was a tremendous buying that happened. This is a rally. This was another rally. It rallied up here to 46.37, and then, almost like clockwork, we had, and you can see that bar right there. That's a sell bar. You can see that sell bar. It denoted the third leg down. So that's the third leg down. Then we had the rally, which began basically at the end of May. That was this mark here. That was this volume mark here. That started the next uptrend, and now we have the beginning of the fourth leg down. So first leg down, second leg down, third leg down. My notes aren't the greatest here, and I definitely think we're going to take another leg down. Now I expect on this one to see we saw some support basically right about here. You can see we bounced there. So our support on this one right now is about 30.37, but I suspect this is going to go down another, I hate to tell you this, but I think it's going to go down another 20%. I think we're going to be down right about here before we get a bottom, and that's going to be about 30.200. That's what I'm thinking. I think that's where we're going to get our bottom. Can't ever, you never can tell, but I think that we're going to get our bottom right about here, about 3,200 on the 3,200 on the S&P 500. Now, why do I say that? Well, the reason I say that is because if you go all the way back here, all the way to November of November of 2020, you can see that's where this started to make its move up. So this is where I think that their support is on the S&P 500. I think it's going to be right about 3,200 or 3,300, right in there, in that area, because this is where I think we're going to give up all of this gain here. Oh, it's terrible, but I think we're going to give up all this gain. But I just think that we will see some support there. but we're quite a ways from there right now. We're currently on the currently we are at we are at currently on this about 37.89. So we got another 500 to go down, I'm afraid. So it's going to be tough, unfortunately. Not what I like to see. But thanks so much for that question. Great question. And let's see if we can get to a question from TikTok. Thank you very much. Thank you very much. All right. Yeah, I had a little bit of issue with my phone. There we go. Okay, so I need to hold it better. All right, so let's take a look here. All right. Depression comes after stagflation. Well, yes. I made money on the Netflix call. On Netflix calls today. Good for you, man. Good for you. I appreciate telling you. Okay. Should I buy Bitcoin right now? Okay, that's probably the next big question out there. What are we going to do with Bitcoin? Well, here's how I'm looking into that. I look first at the GBTC. This is the Grayscale Bitcoin Trust. This represents about 4% of the world's Bitcoin, and I want to kind of look at it to see if we can see anything in terms of trending. I'm not liking this, by the way. I'm not liking this. We have relative strength on the GBTC of 8, which means that if we go over here to the weekly chart, we are in a situation where we're definitely in a downward trend with a gap down, and that is not a good sign. That is not a good sign. A gap down is not what we really, really want to see. So I do think there's going to be some more pain here. My guess is by looking at the GBTC, we're looking at probably, probably half of what it's selling for now, based on this chart. So let's go and take a look at the chart for Bitcoin. See if we can get a Bitcoin chart. Let me just see if I can put this up. There we go. Okay, so we did get a little bit of strengthening today, but I do believe this is a dead cat bounce, and it's not to be trusted. So here's the thing I would say with here's the thing I would say with Bitcoin. If you'll notice, today we did have this little bit of strengthening. We're up about $256, but if we look at the overall trend on this, let's say we look at the year to date, as you can see, we're really at the lowest point. So I don't see this thing ending. I think we're going to probably in the next 2 to 3 months, we're going to be at 11,000 on Bitcoin. I know that's a kind of a bold prediction here, but that's what it's looking like to me. That's kind of what it's looking like to me. If we go to the maximum here, we'll notice that this is 20,000, and we're right about at 20,000. I do expect this to be essentially the next support level down. See, this was the support level on Bitcoin before. It was a 19.6. Now we're at 22. So this is basically, it's given up. Bitcoin has now given up all the gains since 2018, and it potentially will go lower. So my guess is the next stop is about 11,000. I think it's going to move down to about 11,000. So I definitely see that within about 3 months on Bitcoin. So not a good time to be buying it. I wouldn't be buying it right now. But I think Bitcoin will go down more. I think we're going to see it move much, much lower than it is now. And it's unfortunate, but I think that's going to be the deal, unfortunately. All right. Oh, and the question on Netflix, I am holding it. Good question again from Charles. Let's look at ExxonMobil. This is the one that I want to start in this market. I do definitely want to see if I can, if I can put together some more ExxonMobil, because I do think that this one is going to be it's going to continue to be with the prices of oil where they are. I think this one is going to continue to be the one you want. So let's see potential entries for ExxonMobil. Go back here to the daily chart. All right, and I'm looking to see if I can get an entry on it. This is not necessarily a bad place. It's it's not that weak. So we pulled down just to the top of the buy zone. I think you could buy it here. I don't expect it to move any lower because look at this. After hours, it's up 95.20. Not a lot, but it's up. So this is telling me we're right at the 21-day line. Let's take a look at this. This might be a good place to buy. Let's look at the technicals here. Yeah, we're right at the 21-day line. This is a good place to buy it. This is what they call a secondary buy point on it. It's called a secondary buy point. And this is not a bad place to buy Exxon at right now. If you can buy it right at about 95 or so, that's not so bad because I definitely think we're going to get a reversal. It's moved down. It's tested that 21-day line, and I think it's going to reverse higher. So that's my guess. You know, you might be able to pick up 20, 15, 20 points there. So I like it. I mean, I like it in this kind of market. I kind of like Exxon. That's all I'm holding really is I've got BP and I've got Shell, and I'm probably going to try to get some Exxon. I'm just really out of a lot of the anything but oil. I'm really out of right now. I'm short pretty much anything out of oil. Let's look at M. I think it's Marriott, right? Yeah, is that Marriott? Macy's. I would not recommend Macy's. I would not recommend it. Let me show you why I wouldn't recommend it. I love the store, but I wouldn't recommend it. Here's the problem. We have the death cross on it. It's moved. The 50-day is moved below the 200-day. That shows weakness. We then came down to 16. We rallied to the 40-day line, and now we're trying to hold on to the 21-day line. This is actually a shortable stock, believe it or not. Now, I don't think this is going to fall off the cliff, but this is potentially shortable. It's shortable at the 21-day line, so that's kind of something that we might want to look at. So I do think, potentially, potentially, M is shortable at the 21-day line. So that's kind of, yeah, I think M is basically potentially shortable at the 21-day line, and that would be right here. This is a little green line here. So I'm not necessarily going to do it, but retail has put in some very bad numbers again. It's just, except for the discount retailers, unfortunately the full service higher end retailers just aren't getting the job done, and they're not looking very strong. So in this market, Macy's unfortunately is probably probably a short. Interestingly enough, SPY and QQQ is up after hours. Absolutely, that's interesting. All right, any change in the pendant on MO look very tempting. This is a great dividend stock. This is Philip Morris MO. And I just my only reservation here. Well, several reservations. This is called Altria Group. Okay. And the problem here is, and this is tobacco. Okay, so basically we're doing great here, and then boom, it pulled down below the 20. It pulled below that 200-day moving average. Then it tried to rally up to it, and it's still going down. Now it is up a little bit after hours, but I don't think this is change in direction. The direction on this stock is still downwards. So, and the relative strength line, as you can see, is pointing downwards. So I would say, on this one, just I would say on this one generally just no on MO. No on MO. So I don't think you want to do this one. I think it's going to go lower. Wait for it to base. Wait for it to bottom, and then maybe we can put in, let it put it in a bottom. It's a good stock. It's not going out of business, but wait for it to bottom. All right, start off this video has an echo. I'm sorry about that. Oh, I'll watch it on TikTok. I am so sorry about that. I'm still trying to get these technical issues. I think the reason has one is because I was playing it plays directly to the video, and then I had it on a speaker, so I should have probably killed the speaker. I do that just so that I get the TikTok. But I'll post it on TikTok after the show. So thanks, I appreciate that. All right. Is there an insider selling this that we can short? Oh, okay, absolutely. By the way, I am short. I am short on Nike. Was it on there? Yeah, Nike. Yeah, I'm short on Nike here with the bear put spread. So I definitely think it's moving lower. NKE, of course, is the symbol. So I am short Nike. Let's pull up the chart. Right, I am short Nike. It did rally today. Yeah, but look at that. It rallied on the good news, and then it's just right back to the trip down after hours. So I definitely think I'm seeing more weakness on this one. I basically shorted here, right above that 21-day line. Usually this is a good place to short, right at the 21-day line, and then it pulled down, and then it's rallied up a little bit, and now it's moving down after hours. So I think this one probably is going to rally down up until the earnings. Could you short it here? Yeah, you could short it here, but you want to do it very quickly, because once it rallies up to that 21-day line, it's going to move very quickly. So I think that you might be a little bit. It's a little bit late to short it. I think, but you could probably still do it. You just have to be quick on the trigger and close it if it gets ahead of you. Yeah, if you get ahead of you. All right, Mark from beautiful Rhode Island is what will 3,200 look like on the spider? Let's look at the SPY, SPY, and the spider is the ETF. So I was showing you the actual chart of the S&P composite. So it's about not quite the same, but it's similar. So this was the first leg. Yep, let's do the first leg down. This was the first leg down, rally, second leg down, rally, third leg down, rally, and now we're in the fourth leg down. I think it's going basically right about here, about 330. That's where I think we're going to see the next rally. See, these typically are about 20% top to bottom. So right now, where it started its sort of decline was about 417. That was the key. That was the top here. So if we were to, just on a rough basis, subtract 80 from that, we would get about 320, a little bit more, so about 325. Not quite right. So right about here. So this is I expect a decline of about 20% from the high to the next bounce. And I think the next bounce is going to be right about 320, 325, right in that area. I didn't quite draw it right. But that's where we're going to get the bounce, because first leg down, rally, second leg down, rally, third leg down, rally, fourth leg down, and I think we're going to get a bounce there. So that's my guess. And I think I think it's likely to be. Now, we could rally, we could go down even more than that. But the part of the reason I'm looking at the reason I say 320 or so is because if we go all the way back here to November, you'll see that it made its low at 322, and that's right here. If I draw the line, the support basically. Oops. Let me show you the chart. I was not showing you the chart. The support for that low, 322, way back here in November of 2021. It's all the way back there, but that's where I see the support. So, when it peaked here at 470, 479 here, this was its peak, and then it's basically going to give up everything until it gets to support. When it moved below the consolidation support here, that's when you know, and this may be the support. As you can see, it's definitely looking like there definitely is some support here. But I think that, you know, we may see this rally up a little bit, but I think ultimately it's going to blow through the support here on this consolidation. It's going to blow through that, and I think it's going to move down. Part of the reason it bottomed here on the S&P was because this is the bottom of the consolidation. And you can see that's the last few days. But I don't think this is going to hold. I think this is going to fail, and I think we're going to get another leg down. That's my humble take on it. That's my take on it. All right. I am scared about the market after seeing. So I was positive. Well, I don't know. I don't want to be a negative Nelly. It's just not good to do that. But here's the thing. CNBC, here's the thing about CNBC. You know, they are a commercial network. Their audience is not you. You are the product. They want to sell you. The people that support CNBC are hedge funds and other people that need to get out of stock positions, okay? I'll just be blunt on it. They've got a lot of great people over there, but they are not your friend. And I don't think that, you know, and I don't want to rag on them, but I think that they have a lot of irons in the fire, and I don't think they are giving you the full scoop. They don't want the stock market. You know, most of the people that watch CNBC are casual traders. They might have a 401k. They have a Roth IRA. They put it in a mutual fund. They just want to make, you know, they just don't want people to panic, sell, and have the thing go down. But, you know, I don't think that's going to matter. We've got raging inflation. We have a situation where we have a government, unfortunately, that is anti-oil and gas, which is, you know, it sounds good on paper to be pro everything and anti-oil and gas, but the reality of it is terrible. The reality of it is basically everyone pays more, and, you know, the people that work for a living and have to drive cars are going to be in more of a hurt. So I do think we're going down a little bit more, but not to worry. Just stay in cash. The only things I'm really buying long right now are oil companies, because I think we're still in a shortage situation there. I mean, that may change. I mean, we may get some opportunities to buy some great tech companies, but I think unless some of these stocks come down a little bit, it's just going to be tough all the way around. All right, let's talk. Thank you, James, so much. Let's look at three last tickers. SM. All right, SM. Okay. And that's SM Energy. Nice. You're definitely in the right, you know, you're in the right pew looking at stocks that are in the energy sector. Is this one buyable? Well, it's right at the 21-day line. It's up after hours. There's a lot of things to like about this one. Yeah, look at this. Very strong. 99 relative strength. The checklist is strong. Let's look at I want to look at the fundamentals on this one, James, just to kind of take a look. Yeah, these are good fundamentals. It's up 3 quarters in a row in terms of their sales. Their profits are off the charts. They've got a low PE ratio of 13. I'm liking that. They've got onshore, which is cheaper to develop. I like that. Yeah, I like pretty much everything in here. I really do. They've got capital expenditures. Here's the biggest problem that many of these companies are facing right now. Because of the social investing baloney sausage that they have out there, many of these exploration companies cannot access capital on Wall Street. So a lot of this is private money that's coming in. And it's a shame, because we would be producing a lot more oil in this country if that weren't the case. But that is the case. So my biggest issue here is that they just need more capital, really, because I think that everything else is lining up well. Now, that said, can we buy SM at this point? Well, this isn't a primary buy point. It's a secondary buy point, but it's very close to the 21-day line. If you can buy this within 5% of this 21-day line, I think you've got a winner. Yeah, you're at 2.41. I would say this is a buy. You can buy this one, James. So SM, I'm not in it, but I think that you could definitely start wading into it right now. So so right now I think SM is buyable. I mean, that's kind of what I'm looking at. I mean, it looks like it's reversed off of that 21. Oops. It looks like it's reversed off of that 21 day line. That's this green line here. So it does look like it's getting some support there. So I think it's viable. I think SM is viable. Let's look at the two other symbols that you're looking at. DQ. DQ. I don't think this one's viable. This is a Chinese company, if I'm not mistaken. Yeah, China-based company. Yeah, I don't think this one's viable. I mean, yes, it has moved above the 200-day line, but I don't like this one. Let's just take a quick gander. Yeah, this is in a downward trend. Let's put up. Yeah. So this is in a downward trend. It looks like it may have just broken that trend. But I think in this market, I think you want to avoid it. I just do. I think you want to avoid DQ. So I would avoid. I would avoid DQ. Just because it is above the 200-day line, but I just don't think it's the right place to buy it. I don't think it's the right place to buy it. I think it's going to be difficult there. All right, let's look at PAG, and that's the last one for this one. PAG. Okay. There we go. All right, this is Bloomfield. Okay. Dealerships. This is one of the only other areas that I really, really like, by the way. Outside of the outside of a lot of things, I do like automobile dealerships. I think that Penske Automotive. Yeah, I like this one. Yeah, this is good. I didn't realize the symbol on this one. Yeah, I think this is a winner. Actually, I think this is a winner. So I definitely I definitely like Penske. I definitely like Penske. I think that's a good one. So let's wrapping it up here. Oh, okay, I won't. All right, sorry about that. All right, is Verizon shortable? Let's take a look at that really quick, but I want to answer Derek's question. Thank you. The NASDAQ is going to rip out one of these days. There's somebody else. Need to be short-lived short squeeze coming. Absolutely, I think you're right. I think there are short squeeze coming, but that's one of the reasons why. When I'm doing things, I don't like to short directly. I like to use bear put spreads. And the reason I do is because if you do get these short squeezes, it limits your risk. So that's why I do that. But I think it might be coming. But I don't think it's here yet. I think we got another leg to drop. And I think that, we're going to be about 320 on the spider before we see a bottom. I think. That's my opinion. We are in a downtrend, but for the next couple of thoughts. Yeah, what we're doing, Derek, here is we are in a downtrend, but this is a relief rally. Nothing goes down in a straight line. It goes down and it rallies and it goes down. I think, we're going to see weakness by Friday, and I think we're going to get back down, going lower. My opinion. Right. Okay. Well, thank you, everybody. Thank you so very much for taking a look at the show. If you're not already a member of the Action Trade Alerts, it's so easy to get on. All you have to do is go to www.Dallas Trading Floor and just a first and last name and an email address that you get right on and it's free. By the way, we do have a Discord room too, and that if you go to www.Dallas Trading Floor, there's a button you can push and you can take a look at that. So I will be back tomorrow at 5 o'clock, and hopefully you will too. So please tell your friends. If the more people that like the show, the more it gets out to everybody. Really hit that like button. I really appreciate it. It really, really helps. And also subscribe to the channel as well. I definitely am getting out to more people by doing that. So until tomorrow at 5, happy trading, everybody. Stay safe. It's a good time to be mostly in cash right now. And we'll see you tomorrow at 5.